Hello, this is Mark Sorrell with PlanVision with an overview of market performance over a 30-year period as represented by the S&P 500, which is an index which essentially represents a cross-section of the largest 500 companies in America. My intention in providing this overview is just to put some things in perspective for investors as they evaluate their performance of their investments, and also to keep in mind the idea of having a very long-term perspective on what you're doing. Understand the importance of trying to invest on a regular and consistent basis, and then also not reacting to the events of the day. So you can see if we go all the way back to the late 80s, which would be 30 years, the S&P 500 traded at 309, and it's now currently trading at 2,700. So the investor that started at that point has been significantly rewarded. If you look at the performance along the way, though, you'll see these significant increases and then dramatic sell-offs. This period right here represents the dot-com bubble, where the markets grew fantastically over a 4.5 to 5 year period. Big sell-off over a 3-year period. Markets began to recover and actually got back to their highs by July of 2007. And then we saw this dramatic sell-off in what was about a year and a half period of time. And a couple of important points here. Look at this, 735.09. You'd have to go all the way back to get to 735, right around here. That is, I suppose, if I'm doing my math correctly, about a 13-year period of essentially what amounts to no growth. And unfortunately, for buyers on a regular and consistent basis, they actually bought at relatively high periods of time. So for the purchases that they made during these periods of time, they have actually lost money significantly at this point. But if they keep buying, we'll see the market goes up here. And if this was the high right around here of 1517 in August of 2000, in order to get to 1517 again, you've got to go all the way out to February of 2013. So the money they put in on that point literally had made nothing for 13 years. But if they were buying on a regular and consistent basis, they've made quite a bit of money by buying at these troughs. We're again seeing a lot of growth the last 8 or 9 years with some sell-offs along the way. So keep these important concepts in mind as you evaluate your portfolio, what your plan is, your long-term objectives, and don't overreact necessarily to these short-term and dramatic sell-offs. As you get closer to retirement, though, or financial independence, or whatever you're targeting, you want to make sure that your portfolio is prepared in advance for these kinds of periods of time so it doesn't suffer too much damage. Let me know if you have any questions at all as you are evaluating your portfolio or about your investments in general.